When you have this kind of scale, and this is not your religion, you're in deep shit.
This place is already innovating at a speed we don't understand.
I want to look for the Google of Greater China.
It's a great feeling here.
I want to see this, I want to see that, I want to see everything.
RISE is the Web Summit of Asia.
Thanks everyone for attending the panel. Thank you all for coming. So you all have a very strong focus on China, but what other countries look like good investment opportunities right now? Harry or Hans? Anyone?
Go ahead. I mean, for Matrix, we're Matrix China, so we're a China-focused fund. So for now, our 100% opportunities and my personal timing and the team are only spending in China. We believe in the rising Chinese economy and the consumer, upgrade. So overall, I think we're totally China-focused. But at the same time, we're an international platform. So we've got Matrix US and Matrix India on separate independent funds that they're looking at, the other geographic regions.
Mm-hmm.
Okay, sure. For Qiming, yeah, we're also very much China-focused, but as the Chinese internet market is maturing, we're also starting to look overseas. We have just closed an investment in Indonesia because we think Southeast Asia is following the pattern that the internet developed in the US and in China. So there's a lot of things that we can take that we learned from China to Southeast Asia. So that's for us is quite interesting, and the numbers are growing very nicely, both on the internet penetration and the e-commerce growth. So I think that for us is an interesting direction, and also we are following Chinese entrepreneurs. So some Chinese entrepreneurs are going overseas. So for example, we invested in Musical.ly together with GGV, and that is a Chinese entrepreneur, but his app has really taken off in Western markets like the US.
Mm-hmm. And Hans, I mean, you guys, this is more targeted, the question is more targeted about the funds themselves, but how about you guys as investors, what are you telling the startups that you invest in? Hey, why don't you go to Indonesia, or why don't you go, I mean, what other countries are you suggesting the startups to go focus on?
Right. I think for us, we started in the US and then built up a practice in China in 2005. And most of the investments are between those two regions. Personally, I'm a small investor in Flipkart and Snapdeal in India. It's kind of interesting to see what they're doing. And I remember the trip that the Snapdeal guys, Rohit and Kunal, made to China in 2012. And they had a Groupon model back in India at the time, and we discussed about Taobao, Tmall, JD, take your pick, what could work for India. They picked Tmall, went back and changed it. Mm-hmm. So you start seeing a lot more dialogues between entrepreneurs in different countries. And China used to be copying everything from the US with some degree of localization, and localization component becomes so big, becomes now it's innovation. And now India is doing the same thing, looking at models in US and China and see what makes them for India. I think that's great, and that's what venture should be.
Mm-hmm. And I mean, obviously we've seen quite a lot of situations, problems in the tech world the past several years, but what would you guys say has been the worst failure, in the past 12 months? It could be a product or a company where investors had very high hopes, gave tons of funding, and then it didn't come through. I mean, Helen?
I think the biggest news for me was about Le TV, the whole Le Shi blow up. Yeah, because they really were so overstretched and so ambitious, and we started hearing rumors about funds being taken from one entity to another, and so I think that really raised some concerns. But I think it's a good lesson for Chinese entrepreneurs that while you want to run very fast, while you want to be the next Steve Jobs, you should also be wary of being overstretched, and can your whole team and can your whole funding keep up with you? Yeah.
I mean, in what role do you guys play as investors to direct the companies in that way?
Le TV is actually a very classic example because from the past couple of years, a lot of these Chinese entrepreneurs that have been trying to stretch themselves, going so fast that you cannot even imagine. You see Uber going really fast in the U.S., but you look at what happened to Didi Kuaidi and look at what happened to the recent OVO and Mobike, the bike sharing economy. They're just growing multiple times faster than the last generations, and the last generation was probably only 18 months away, right? And which is a good thing. I mean, you're creating a new economy, you're creating demand, and everybody's trying to do that. But, people will have to just to be very, very careful on not overstretching, what they can afford, how much they can raise, and overspending with the expectation that I can always get the next billion, in the next 2 months, which is not always possible, I think.
But Hans, have you guys ever gone to a startup and say, hey, take it easy, you guys are growing a little bit too much, or overstretching yourselves?
I think as a board member, it's our responsibility to share what we have seen in other instances with our entrepreneur. Most people don't always listen, so you have to do this very tactfully. But if you've been around the block enough and been through enough up and down, you earn some credibility for the entrepreneur to want to listen to you. I was fortunate to be an early investor in Xiaomi from day one, so seeing their ups and downs. The last 2 years, I hear a lot about the TV, the shit from all my friends, like, oh, come on, you guys are behind, those guys are kicking your butt. And, sometimes the game is not over until this is finally over. So you just don't know. But you can see that the entrepreneurs went through cycles. And it's important that when they're down, you spend time coaching them, helping them. And when they're up, you guys tell them don't get too cocky, because, anything can change in 12 months.
That's right.
And I think Hans actually made a very good point that it's not always blue sky. I mean, no matter how successful you are, you're going to be going through ups and downs in every industry. No matter you're working as like a traditional industry, as a VC, and as an entrepreneur. So everybody will have to go through cycles, and you just have to manage that. That's the number one responsibility of like the CEO, not to overstretch and not to kill yourself because of like the hype or like low on cash or whatever.
I mean, the theme of the panel is investing in 2017. What areas are you guys excited about? What technology or companies are you guys pumped up about?
Okay, I'll
Helen,
go first.
yeah.
Sure. Earlier this year, we started looking at Southeast Asia a little bit. I talked about that. And also, we continue to be excited about like more Internet of Things, new technologies, especially how the online, offline will start to merge. So for example, we did an unmanned convenience store together with GGV, actually. Yeah, so I think it's a very interesting company, using like, technology for mobile payment, for RFID, and combining it with, scanning the QR code to enter the store. So it actually is quite revolutionary because it lowers the cost of operating a convenience store, completely unmanned. So I think that is a direction that we're still very excited about. Yeah.
Harry, where you see?
I mean, we're a relatively big fund that we're doing at least 70 to close to 90 investments every year. So basically, we have stretches to almost every vertical industries, from enterprise services to marketplace to sharing economy and everything. And I think most recently, what's the hottest? I think that continued to be the rising consumer spending in China. So that applies to what Helen just talked about. It could be convenience stores, and it could also be how internet is evolving and changing. The traditional world. Say, for example, biking, sharing economy is just one of them. We also invest in a company called Guazi, which is, a secondary car trading platform, which is doing extremely well, disrupting how traditional trading has been happening in China. So that is actually trickling down into every single vertical industry, from traditional to finance, to car trading, to steel trading, to everything, that is happening in China.
So all of us were very fortunate that we're investing in the internet-related space. I think for many of us who started investing in China around 2003, 2004, 2005, seeing back then, offline economy, 关系, government relations is so important. You want to do stuff that you have government supporting you somehow. And all that funds, all that venture in that space, most of them haven't done that well in the last 10 years. And there was a lot of funds from US that were going to India in 2006, 2007, 2008. Most of them bet on a lot of offline stuff as well, because that's what is proven.
Yeah.
And it's always the thing that's around the corner that's changing the game, changing the landscape, that makes investing in the future much more interesting. Internet, thank God for the PC internet, and then mobile internet. Now down the road, maybe it's AI, maybe it's frontier tech, it's machine learning. More SaaS, just a lot more technology is changing the way we live. And like both of them have said earlier, every single vertical in the offline economy is being destroyed by internet technology. So as long as politically it's relatively stable and economic growth is happening, there's job growth, you will see internet and tech disrupting and adding efficiency to every single vertical in the offline economy for the next 10 years in India and China for sure. No problem.
Hans, we were in the panel last year, if you guys remember. We were talking about this trend of China transitioning from being a copycat to, an innovator. Recently this year we saw a company in the U.S., Lime Bike, sort of incorporating this whole, bike sharing phenomenon that's been booming in China. I mean, what sort of other areas do you think we can see, China exporting ideas to Europe or to the U.S. or other markets?
I think China is very strong in online to offline. So you see Lime Bike doing that. I love the two co-founders. They're great. Then you see that happening in virtual items like live broadcasting. And we're investing in Musical.ly, probably the largest VC in there. And seeing a Shanghai-based team with co-founders that have experienced both US and China to do something that's global is fascinating. You also see it in commerce. We're an investor in Wish in San Francisco. The team has people from Europe, US, and China. The model is Taobao on mobile for the rest of the world. And they're growing so fast with Chinese goods selling to consumers worldwide. That's hard to imagine 5 years ago, but you still see more of that now. I think a lot of innovation from China is going to be exported along these areas. Frontier tech, AI, IoT will be the next wave. So you will see more. And I think I encourage all the Indian entrepreneurs, go to China.
And copy.
The same thing that Chinese entrepreneurs did to the US 10 years ago. It's worth the time. And whoever can leverage those cross-cultural advantages, linkages, knowledge sharing best, will have a chance to win in their home market. Gotta do it.
Do you have any views on that, Helen?
I think Hans talked a lot about the areas which I think China is quite advanced. I think mobile gaming, Wangzhou Rongyao, like 100 million users, it's just crazy.
Amazing.
And then internet finance is an area that we looked at, like US and China, and it seems like the China numbers are more amazing than the ones in the US. And so I think that those are certain areas that China has done very well. Yeah.
And so one of the very interesting, sort of sexy areas right now is AI, virtual reality and augmented reality. I mean, where do you guys see this area as an investment opportunity? I mean, how can they monetize the whole projects, or is it way hyped up, as we saw in the last episode of Silicon Valley, right? The TV show, the whole thing about the VR. I mean, where do you guys see this whole industry?
I mean, that's this very interesting thing about the venture market. Things comes in really fast and then got hyped up, and then eventually, it will kind of like either flat or die down. It depends on whether they are eventually creating value for the market. My personal thought is, AI is going to be happening, and it will happening like what happened to PC internet and mobile internet. It will trickle down into every vertical industries. Yeah. But how fast will that be, and how much opportunities are we going to be created because of that? I think it's still way to be seen. A lot of people are spending way too much time talking about AI infrastructure. These companies are creating, NLP technology, image recognition, and they are trying to value themselves at multiple hundred millions or billions, which is only, whoever is only creating the internet doesn't make any money. The ones that created an application on top of the internet, it's disrupting the market. Those are the ones that's going to make billions of dollars. So that's what my personally feeling is. We really have to figure out where are the right opportunities when AI can match us into the real ecosystem, into the market, then they can create real value. When that happens, I think there will be a lot of money to be made.
Helen, do you guys have any investments in virtual reality, or I mean, where do you guys see that whole, area?
Yes, we do have one called HyperReal. It's a head-mounted display system, as well as they have this lighthouse positioning system software. So I would say AR, VR is early days, but we like to have certain early stage investments so that if the sector takes off, we are well positioned. Yeah, but I think we are more, we've made more bets on the AI area. So we have like Face++, which is in the facial recognition, and we also have like natural language processing. We have Yunzhishen. So those are the investments that we have done very well recently. Yeah.
A lot of people think that AI is the next mobile. You hear a lot yourself. And I think what AI is different from mobile in the sense that there's a whole B2B area. Now mobile will take more time to go, but you see it with AI already, whether it's in customer service or customer relationship management, you see AI playing a role on the B2B side. There are fewer opportunities on the B2C side, and even when they are, they think the big companies like the Alibaba, the Tencent, Baidu will have an advantage.
Yeah.
So how can a small startup compete? We're an investor. My partner Jenny Lee was an early investor in a company called LingoChamp. That's in the audience, and you'll hear from Wang Yi, the CEO, later on today. Be able to encourage people to learn English using an app to do it. As you accumulate a lot of people's diction, people's way of talking, and be able to correct them or make them improvements on what they do. And you record that knowledge, that data, and be able to do machine learning on top of that to figure out, hey, you're going to go for an interview 2 weeks from now. It's going to be all English in a professional setting. Here's where your English level is today. Here's what you need to do to get there. Here's the program. So AI has a promise of offering something like that, very specific, very targeted, but without a lot of data accumulated over the years, you won't be able to do it. So in areas where the big companies are not in, you can find very specific verticals where AI can have a very interesting piece. And it takes a team that's going to be quite creative and also experienced working at Google, not the big companies, to know what it takes to build something like that. And that's exactly the kind of team we would love to back from day one.
Earlier this year, there was some data that initial coin offerings, the ICOs had, the amount of money raised on ICOs had surpassed the amount of money venture capital firms had invested on startups. I mean, do you guys have any view on ICOs? I mean, are you going to be out of a job because of all this, sort of fundraising that the companies are doing themselves with the crowd? It's sort of a crowdfunding, right? I mean, what's your view on the ICOs?
I think, first of all, somebody needs to do another research on how much money people have made from ICO. Because, investing is not about investing. It's about how you get money back and returning to the LPs. You can invest as much as you want, but, ultimately, whether you're betting the right company and growing them and eventually getting the money back to our investors, that's the key. So, there's no point of really arguing, who's going to raise more money, whether ICO or the venture market. But I think they're actually creating a new way of how people can raise money. Either, how you want to classify as more like crowdsourcing or whatever, right? It's a unique way that is challenging the ecosystem. But ultimately, I think, things will have to eventually leave it to the more professional people, Helen, myself, Hans, and the venture space that can make the right decision on investing in backing the right company. I think in any market, it's all going to be the same. 80% of the money is going to be made by 20% of the people, not by any random people that can put money into any random startup. If yes, then I would definitely lose my job.
And have you guys invested in any ICOs or cryptocurrency? I mean, where do you see that
we were talking to one in the US that's quite unique because the entrepreneur is super amazing. Whether we would do the deal or not, I don't know yet. I think ICO, like Harry said, it will fund a lot of innovations, which is great. And most innovations don't end up happening. The ones that end up have a shot, we tend to invest early and make sure they do well. So I think having a bigger, more money part of the ICO is good for the entire ecosystem. So we definitely welcome it, actually.
But I think eventually it's more challenging to the angels ecosystem rather than the venture ecosystem.
Yeah, and I think just recently there was this dispute in China about this crowdfunding between Sanshi Ke and Tai Mei. So I think that it all is well until people start losing money or entrepreneur runs away with the money. And, that's when...
Or misuses the money, right?
Yeah, misuses the money. That's when the test comes. And I think investing is a hard thing to do. So, I think people should be aware. Yeah.
I mean, are there any areas where you guys see there's just too much hype and things are bound to, not do well going forward? I was just reading an article a couple minutes ago about this umbrella sharing company that lost all their umbrellas in China. I mean, where do you see there's a lot of hype and, you guys definitely wouldn't touch it with, 50-meter pole.
Helen's an investor in Mobike, so you can talk about that.
Well, I think, I mean, you guys are an OFO, right? So I think we are believers in bike sharing. I'm not sure about Umbrella or Power Charger or some of the other sharing economy, plays. I think you need to understand, what are the unit economics of each, particular area that you want to invest in. I think bike sharing is interesting because in China, the last mile transportation, is still an issue as you, have mass amount of people coming out of subway stations or take off their buses. They still have that distance to walk, and so bike sharing is a good way to solve that problem. And with the density of Chinese cities, there's 128 cities with more than 1 million population, right? It's very different from like Europe or US. So I think bike sharing makes sense. So I think it really depends every particular sector, and also what are the barriers to entry? Are there network effects? I think bike sharing still has some network effects, and what they did with the GPS and the smart lock to lower the cost of operation to us is the interesting part why we wanted to invest in. Yeah.
Okay, but you guys didn't answer the question. You said what is not a hyped up. What is a hyped up sector? What do you think?
I want to add up to what Helen just mentioned, right? I mean, the sharing economy, the entire thing that you can scan a QR code and then pay 1 RMB for something, it's been overly hyped up in China. I mean, me and Helen's probably a believer in the bike sharing economy, but that, the success of that doesn't mean that it can be successful in any rental system. There are a lot of people investing into mobile battery packs. There are people investing into umbrella, basketball, standalone KTV, whatever. There's happening that you can scan your QR code can happen. Massage chair, coffee machines, orange juice machines, there's like everywhere in China. But for us being a VC, we just have to dig into the real numbers. Whether there's a big market big enough for them to sustain, at least for us, a multi-billion-dollar company in creation, and whether or not that will sustain a company that have strong defensibility, network effect that has been happening in what we have previously invested, like the internet economy. So that, a lot of these were just purely rental economy, which is workable but not sexy. Yeah.
Mm-hmm. I mean, we've seen, a market that was very, very popular with lots of players in China. The ride-sharing, ride-hailing market sort of condensed into, fewer players. I mean, do you think this is bound to happen with the bike sharing as well, and in other,
I think this playbook that you have that's emerging in China over the last 6-7 years is that starting with the Groupon model, you just see a lot of money pour in to the top 10, if not 20 players. Less than 50% raise the next round, less than 50% raise the following round, and more money pile into the top 2 or 3 players. Eventually, you see an M&A. And along the way, one of the Baidu, Alibaba, or Tencent will put money in the top players to accelerate our path. And all in all, you're going to see about $2 billion, $1 to $3 billion raised in this phase until you have number 1, number 2 left. And they will figure out a way to merge. If they don't, Ali and Tencent will ask them to figure out a way to make it work, because everybody wants to make money. And we have number 1 player left, you most likely will have it'll be profitable, and then be able to go IPO. So that playbook was going to play out in every single category in China. So we're going to be talking about this for the next 5 years, no problem. And that playbook eventually will export it to Southeast Asia or India, because that's what has worked. And people who bet on the number 1, number 2, ends up making money, even though you have all the headache and pain along the way. Yeah. So it's a proven formula now.
Yeah, but I think the bottom line is the market has to be big enough so that after all the money that you have raised and burned, eventually you can sustain yourself to be a multi-billion-dollar company. Because to make that happen, all of these will eventually they have to raise hundreds of millions or billions of dollars. And if you cannot make it back, no investors would not back you. That applies to China. That will highly likely to be applied easily to India. But not for every industry and not for every economy, maybe not for Southeast Asia in every vertical. So we just have to pick and choose the right ones.
It'll be the large size market and also high frequency of usage. Because it's all about making sure that once the user use your service, they do come back organically on their own and not through just a lot of promotions. Initially, subsidies needed to get them to form that habit, But after 2-3 years, they need to have that habit themselves. So if it's not habit changing at the end of the day, if it's not frequent enough at the end of the day, you won't make the unit economics work.
I mean, we've seen a lot of the recent funding rounds for companies in Asia at valuations much, much higher than similar companies in the US. I mean, I know this is an ongoing question. You probably get asked all the time, and I know we touched on this last year. I mean, where do you see potential bubbles in the market in Asia? I mean, what sort of areas, and are you guys more wary of investing right now? Hans, do you want to take this?
I think a lot of us knew that China was the economy was going to overheat it, especially in the stock market in 2005, 2006, 2015, 2016 timeframe. We just weren't sure when the correction would come, and it happened in the summer of 2015. And so none of us would know exactly when the next correction will come. But what we do know that in the longer run, as long as the introduction of internet and technology are adding value, if you can invest through the cycles, you will win. So usually when there is a huge correction, a lot of people have fear of, can this go on? And that's usually when we double down, because you can get into companies at a cheaper price, and the companies that are focused can gain scale. All that theory is based on having political stability, and there's no war, at least not a protracted war. And all that, sometimes you just don't know. Because when you think they're going well, something a black swan event happens. So we do monitor what's happening anytime there's a territorial dispute, there's some kind of tension going on between countries, and that's part of the game. And you have to be able to have enough, raise enough of fund to be able to invest through those kind of cycles.
But Helen, would you say is there a potential bubble, coming up in some areas? I mean, where are you guys more cautious?
Okay. Yeah, I think maybe not a general bubble, but there is definitely a lot of money in the system. I think what we try to do, like Hans said, is just to ride out the cycle. So we, like for example, in AI, we made bets pretty early, I think 3 to 4 years ago, and now they are at very high valuations, and so we sell some of our shares. So I think we try to sort of ride out the whole cycle to make sure that on the valuation side our blended price is still pretty attractive. I think that's the only thing we can do. Yeah.
I want to add a little bit of opinion on my side. I think China has already proven that we have a market that can be as big as the US. So just trying to do a direct comparison, the market cap of like Tencent versus Facebook, Alibaba versus Amazon, Didi versus Uber, et cetera, et cetera. I mean, ultimately, there's only one thing that can value the company. If you're a listed company, the people will value you through a P multiple. And if you have a market that is big enough that can sustain that, there will not be a bubble. So, and China is now currently proven. Obviously, not in every verticals, but, in general, we are creating a market as big as the US. So in terms of valuation that a lot of these Chinese companies are matching the US, if they can deliver, that will eventually make sense. If they don't, then of course there's a bubble within, or like a tiny piece of a bubble in between the two markets, right? But right now, looking at some of the major markets, they are very, very similar. And even in some of the selected markets, China is actually bigger than the U.S. Like Meituan or all the more, the delivery market is probably 5 to 10 times bigger than the biggest delivery market in the U.S. is happening. So that's how it works.
Yeah, I think a lot of companies, they can grow into their valuation because the growth is there, right? I mean, I think when I moved to China in 2005, GDP per capita was 2,000, and then now, it's like 8,000. So, just throughout that space of time, it just quadrupled. So I think that China, if it continues to, grow, I think that a lot of times the valuations look expensive now, but may not be in the future. But the same may not apply for other parts of the country. I mean, other parts of the world, like Southeast Asia or India, because the GDP growth is much slower. So I think when we look at other countries, we have to be more careful.
Great. Well, thank you very much.
I was going to say, there are a lot of entrepreneurs in the audience from India. I just want to share that in 2005, when we started investing in China, everyone in the U.S. thought China was overheated.
Yeah.
And Baidu went public in 2005. Their revenue for 2004 was only $11 million. Market cap after the first day of trading was $5 billion. So everyone then thought in the U.S. thought China was due for correction. And I think over time, I think India will be extremely interesting market. And even in Latin America, like in Brazil, in Southeast Asia, Indonesia, it will become more interesting. And I think it makes sense to have a global footprint and not be afraid to go out to see different countries and learn from other people. Because over time, we see interesting things happen when you consistently bet on the right side of technology and history.
Great.
Totally
Well,
agree.
thank you very much for your time, and thanks everybody for listening.
Thank you.
Thank you.
Thank you.
When you have this kind of scale, and this is not your religion, you're in deep shit.
This place is already innovating at a speed we don't understand.
I want to look for the Google of Greater China.
It's a great feeling.
I want to see this, I want to see that, I want to see everything.
RISE is the Web Summit of Asia.